John Najarian here, folks. Welcome to 3 at 3. Unusual activity. Yeah, that's the name of the game. We're going to show you some of the past unusual activity, as well as highlighting fresh unusual activity that you need to be aware of. So let's get started with October 4th, 2022, unusual activity, which means the activity that our computer, our algorithms have triggered as saying, this is strong, this is not usual, it is unusual activity. So what we're looking for is accumulations of call options or put options to let us know which direction somebody is betting, to the upside with calls or to the downside with puts. And again, I will share many of those with you today, both past and new stocks. Now, take a look at this one because this is one that we highlighted last Tuesday, the 27th of September. This is textbook because, as you see, we put it up there at 10:15 in the morning. They were buying the 46 calls, which expire this Friday, not last Friday, this coming Friday. Last Friday, of course, was the 30th. This Friday would be the 7th of October. And that's what the 07 on that particular post means. 07, 46 calls, 65 cents. So they bought a fair amount of those calls. And those calls went to $5.80 today. So you could, if you want to, pay attention to the 1,400% return. But that's if you sold at $3.50. Instead, these were more like 580 on the highs. Now, I didn't sell the high of the day, but nonetheless wanted to highlight it for you because as Elon Musk announces that he will be perhaps taking Twitter and dumping a whole bunch of people, I'm betting, this was a shocker to many, but perhaps not to this particular trader. And there's that activity in the stock as well as the options. I showed you the option activity. The stock, look at that. Look at how little volume trades on the 23rd and the 26th. The 27th, all of a sudden, boom, 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 boom. Look at all those highlighted yellow areas on that graph. Then you go to the 28th, it picks up a little, picks up again on the 3rd, and then boom, to the upside today, where we traded to nearly $50 a share, and those calls went to approximately $5.80. Bang! That, my friends, is why we trade options. All right. With that said, this one also worked out. And my friend Carl Quintanilla highlighted this by putting out that, hey, they think that maybe they're not going to be doing so swell, they being Hasbro. Well, yeah, we knew about it weeks ago. Hasbro put buying approximately $80 a share, and they bought a considerable amount, 15,000 of these November 77.50 puts. That's a lot. And today, down another percent to 68.25. Then there's the GLD, 12,700. That's 1.2 million because every option is for 100 shares of stock. So when you're talking about the stock going from, for instance, $152 per exchange traded contract, ETF, exchange traded fund, to as high as 160 and a half. Yeah, that's a pretty good day. And we still have more time. These are November options. So I have rolled up and rolled up again, and I'm now in the 158s and looking to sell upside calls against them. Why do I do it that way? Let me tell you. Number one, they haven't closed these options yet. We haven't seen them selling these calls. So to me, that says that the catalyst that put them into these calls is still there. But I want to pull money off the table. And so buying those 152 calls and selling, for instance, the 156, 158 calls against them as we rallied, that's worked out fine. But then I buy back my shorts, get rid of that long at the 152 strike, and buy the 158s and sell upside calls against those. Now I'm still participating, but I've taken a ton of money off the table. That, I think, is how you do it if you want to be prudent and you want to cut down on the risks that you've got on the table, because nothing goes straight up forever, nor does anything go straight down forever. You got to take profits when you can, not when you have to. Carvana, well, Pete and I talked about this one last week as well. And I talked about it right here with you as well. They were buying upside calls that expire next Friday, not this Friday, the 7th, but next Friday, the 14th of October. They're buying the 23 strike calls. Well, the stock, Carvana, trades up through 23 today, and it's a beautiful day for those of us who are in that call. How about this one? Just yesterday, Applied Materials. They were buying 6,500 of the this Friday expiring 91 calls. So if they're buying all those calls, what do? Stock's 86. So I buy the 86 and 87 calls and sell upside calls against it. Stock moves 3.5. That's more than the market has moved today. And I load in all these upside calls against it at the 90 strike. Bang. That's another way that we trade it. Want to learn more? Join us for a free webinar tonight at 4 p.m. Eastern Time, right at the market close. You can join us October 4th, 4 p.m., AJ Monty's Bear Market Breakdown. So what do you have to pay? This thing must cost a fortune, right? No, it is completely free. You can join us for free by registering at marketrebellion.com. And you will also get a copy, whether you are able to attend in person or not in person, remotely, whether you're able to attend live is what I should have said, or whether you have other engagements, but you wanted this information. In both cases, you get a copy of the presentation. So please go to marketrebellion.com now to sign up for AJ Monty's Bear Market Breakdown, and then just click register and you'll be in with us. All right, here's what we got. CCL, bearish puts, stocks just under 8. But here's what I don't like, folks. They are buying a way out of the money put. Not just a little out of the money put, a way out of the money put. June 4 puts. So what I view this as is a cheaper shot to lock in the risk that they have in the bonds of CCL. Those bonds are offset by something that we all refer to as a swap, a credit default swap. What does that mean? That means when you own the bond, even though you might be first in line in a bankruptcy, you have risk for that money that you put up for that bond. Now, they're paying you a large interest rate. Many of us have seen double-digit interest rates offered by these cruise lines to secure funding. But when they're buying a put that's this far out of the money, in other words, stock has to lose half of its value for these puts to be kicking in, I don't think this is somebody who's protecting or betting on the downside. I think it's somebody that has credit risk in the stock, and those credit default swaps are too expensive. So deep end of the pool here, I think it's somebody who's worried about the bonds that they own, not somebody who thinks that the stock's going down. And look at the size of that trade, 8 million share equivalent, because they bought 82,000 June 4 puts. So you know, I am not buying puts in this one. I am instead highlighting this for you because at our RebelCon 2022, I talked about when you see somebody buying a put that's that far out of the money, there's two possibilities. One, the credit default swaps became too expensive and they elected instead to ask for a very low strike for the puts possibility. The other, they're just trying to set a floor and betting big on the upside of CCL, Carnival Cruise Line. So that's the way that we break this one down. Nikola, I'll break this down, $3.74. Are they buying the 7 or the 8 calls? No, And if they were, I would say that they're probably short Nikola, and those are just disaster protection against their short. They're buying at the money. They're buying the November 4 calls. So if Nikola can do what Rivian has done, which is deliver more cars than people expected, this one will hop to the upside. Again, 20,000 calls times $3.74 stock, call it $6.50 or thereabouts. $7.50 or thereabouts for a million shares of this, because 2 million shares, I just basically multiplied it out. So you're basically looking at about a $7.5 million potential trade here. I like it. I am in it. Bang. All right. Final one now. Open. This is open. It's bullish call buying in OPEN. OpenDoor Tech. $3.37. Another cheap shot. And guess what? They're once again buying upside calls. They're buying the upside calls at the 4th strike, which means they only have, let's see. So today is Tuesday. They have Wednesday, Thursday, Friday, Saturday, Sunday, Monday, Tuesday, Wednesday, Thursday, Friday. Next week is when they expire. So that's not a lot of days to be right. 11 days. They think they know something about the stock and the direction it's going. I want to follow along. So buying at the money calls and betting that I'll be able to sell an upside call against it is the way I'm playing it. Again, deep end of the pool. These options expire next Friday, October 14th. Bang. All right, folks, that's going to do it for us. Encourage you to check out my brother and I in the Rebel's Edge, Monday, Tuesday, Thursdays, 1 p.m. Eastern Time. Make sure you check it out. It's going to be moving to another streaming network shortly. We're already on Twitter, Market Rebellion, and YouTube. We're going to be announcing a big move to a streamer that has millions of folks, and I think it will really help us ramp this show up. It's a trader show. It's not about macro. It's about trading. So if you want to see and hear macro, well, there's a bunch of other places you can go. If you want to hear about trades, this is where you want to go. Bang. I am John Najarian. I thank you for joining me today. You can check out marketrebellion.com/get started to learn how to get a coach, get a mentor, do distance learning, meaning on your computer, on your iPad, on your iPhone, while you're on the train, while you're commuting, while you're flying. You can learn more about trading stocks, options, and futures. And of course, we have our subscriptions available to you there as well. marketrebellion.com/get started. Bang. Have a great day, everybody.